Hey, welcome back. So Bitcoin is at $72,909 and everyone is watching 70K, but I want to show you what the chart is actually telling us right now because there are three specific technical signals that most people are either missing or misreading completely. Let's get into it. And by the way, the third signal from the options market is the one that genuinely surprised me, so stay with me. Signal 1, the descending channel structure. Bitcoin has been forming lower highs and lower lows since May 7th. That's the definition of a downtrend. The upper boundary of this channel sits at 74,500 to 75,500. This is the level that has flipped from support to resistance. As long as Bitcoin stays below it, the downtrend is intact. The lower boundary sits around 70k to 71k. When a descending channel reaches its lower boundary, one of two things happens. Either it bounces and tests the upper boundary again, or it breaks below and the move accelerates. The key breakout level is 74,500, a daily close above that with volume the downtrend ends. Until that happens, lower highs and lower lows continue. Signal 2, RSI divergence. The daily RSI is at 33. This is the lowest reading since February 24th. The day Bitcoin was forming its bottom at 60k, RSI below 30 is technically oversold. We're 1 point away from that threshold. When RSI reaches oversold and price is simultaneously sitting at a channel lower boundary, that combination has historically produced sharp bounces. Not always, but the setup is specific and identifiable. The weekly RSI at 41 is approaching but not yet at oversold territory on the higher time frame. The weekly RSI has only been this low outside of full bear markets 3 times in Bitcoin's history, each time price recovered within 4 to 6 weeks. Now, on the other hand, there's a signal 3, the Bollinger Band lower touch. Bollinger Bands are bands that expand and contract around price based on recent volatility. The lower band acts as a dynamic support level. When price touches the lower Bollinger Band during a downtrend, it doesn't always mean an immediate reversal, but it does signal that selling pressure is statistically stretched beyond normal distribution. Volume is also declining on each successive drop. That tells you the selling momentum is weakening, fewer sellers participating with each new low. Weakening volume on a downtrend is classic early divergence signal. Now, the liquidity picture, because what's sitting at 70k and above 78k is what makes this chart setup genuinely interesting. By the way, if you want to trade around levels like this, I use Unix. No KYC, deposit in 2 minutes. Link is in the description, by the way, and pinned in the comments. So let's talk about the liquidity picture because this is where the technical setup gets really interesting. Order book data shows $500 million in bid liquidity stacked between 72k and 70k. That's 6,235 Bitcoin sitting as limit buy orders, real money waiting to buy at those prices. The largest cluster sits directly above 70k. Bid liquidity works like a cushion. When price trades into a zone with this much stacked buy orders, it can slow a decline significantly and trigger a sharp bounce if the demand absorbs available supply. Below 70k, one more cluster at 68k $505. That's 1,012 Bitcoin, worth approximately $69 million. After that, order book data shows very few visible bids. The book thins considerably. A break below 68k 500 would have very little standing between Bitcoin and the 200-week EMA at 68k. Now, flip to the upside, liquidation heatmap data shows approximately $2 billion in long positions at risk near 70k. This would add selling pressure if 70k breaks, but above 78k, $5 billion in short positions are stacked. If buyers absorb the 70k wall and push price back through the channel upper boundary at 74k 500, those $5 billion in shorts get forced to cover. That's the squeeze mechanism and it would accelerate any recovery significantly. The options market adds one more data point. Glassnode reported traders spent nearly $10 million on put options with a 70k strike. Put options profit when price falls. These are traders hedging against a drop to 70k dollars. That level of options concentration confirms $70,000 is the most watched level in the current market. So what does all of this tell me? Here's my honest technical read and exactly what I'm doing. By the way, Unix is where I place my trades. Get founded before Bitcoin hits that bid wall. Link is in the description and pinned in the comments. So here's my technical read, clean and simple. 3 signals pointing at the same zone. RSI at 33 approaching oversold, the lowest since the February bottom. Lower Bollinger Band being touched with declining volume, and $500 million in bid liquidity stacked between 70k and 72k 78k with $5 billion in shorts sitting above 78k. This is not a guaranteed reversal setup. The descending channel is intact, the downtrend structure is intact, 74,500 has not been broken. Until it breaks, I do not call a trend reversal. But here's what the technical picture is telling me. The 70k level is one of the most fortified support zones I've seen on this chart in months. $500 million in limit orders, 10 million in option hedges, the lower channel boundary, the lower Bollinger Band, all converging at the same price. My plan: Bitcoin tests $70,000, I add into the bid wall. 68k 500 holds, I add more. 68k 500 breaks, I stop. The 200-week EMA at 68k is the absolute floor, and I reassess below it. On the upside, 74,500 daily close with volume is my signal that the downtrend is over. Above that, the $500 billion short squeeze towards 78k and the 200-day EMA at 80k is the base case path. Downtrend intact below 74,500, reversal confirmed above it. 70k the most technically significant level on this chart right now. So let me know what you think in the comments. Thank you so much for watching, and I will talk to you guys in the next video.